Hello and welcome into this lesson. In this lesson, we'll be looking at the relationship between gold and the dollar index, which is a crucial factor while we are trading gold. So remember, first of all, I would say that do not just trade gold blindly without the dollar index. First, you have to do your market analysis to be able to determine, since dollar index is the benchmark, we want to determine the order flow for dollar index before engaging in the gold pair. So we'll be looking at the relationship between gold and dollar. So we'll be looking at, for example, since 2025 January, we see that gold has been in a bullish trend, running higher and higher. And if we look at the daily chart in the dollar index, also 2025, in this year, we see that dollar index has been, so while index is moving lower, we have a confirmed bullish trend in gold. But there are instances in which we find that now gold is not in a buy market, because most of the time gold is a bullish market. Okay, gold is a bullish market, but in some instances we find that gold is not buying at all. Sometimes it may be selling, and I can say that it may be as a result of the dollar index. So we have to understand the relationship between these two pairs. So you have to do your intermarket analysis to be able to determine what is happening in the dollar index and what you should anticipate to happen in the gold. Remember also that gold is considered as a pair which is a safe haven, because if we look since for over more than 10 years or even 20 years, we see that gold has just been buying. So the reason as to it's called a safe haven pair, or a pair, is because, for instance, you may see that around October we were buying. So imagine if you just bought this pair gold since October up to today, you see that you'd have done very well in terms of making your returns. So even though the market had come against the order flow for gold being bearish, so even though we had instances in which the market was bearish, but we see how much continued, how market picked up and continued moving higher, even to higher prices, which I don't know, maybe they have not been recorded. Yeah, because we don't have previous history of market reaching such highs. But if we look at this area in which even this pair was selling, this was October to November. So can we say that around October to November we anticipate bearish markets? So first of all, we cannot conclude by saying that, because if we look at previous examples, and this is now seasonal tendencies. So if you have a place to gauge these seasonal tendencies for this market for gold, we see that between 2023 October, this pair continued moving higher instead of moving lower as we saw in 2020. Which year was this? 2024. So in 2023 we moved lower, yes, but just September to October, but from October to November we continue moving higher. So for seasonal tendencies also, I think you can just search for seasonal tendencies for the gold market to be able to know when to anticipate a bearish market in the gold. So maybe to avoid these periods, but remember we confirm these seasonal tendencies by doing our intermarket analysis and also higher time frame analysis for gold and also for the dollar index. So if I go back into this period in October to November, we see that we had in the daily chart we had this confirmed breaking structure in the daily chart here, which confirmed, you see how dynamic it was, how dynamic this move was, leaving imbalances, confirming that we have entered a bearish maybe season or trend for a while, but it does not now say that we'll be trading will be bearish forever. And I can say that it's also attributed to the dollar index. So let us look at dollar index in 2024 October. 2024 October, yeah. So this is it. This is this period. So between August, September to October to November, we see that dollar index was in a bullish market, and it continued further to January 2025. So what may have triggered all this movement, and how would you have anticipated this price movement? So first of all, we have to do our top-down analysis. So from the monthly chart, if we go to the monthly chart in that specific period, we see that we had hit this imbalance here. We had hit this imbalance September, around August, just this particular period, and we traded into the opposing now monthly fair value gap. So let me remove this. So we traded back into the opposing monthly fair value gap. So let us look at also December 2023 to see the relationship that happened, if particularly in the gold you would have anticipated this move. So let us look at the daily chart between these two monthly imbalances. So between July 2023, so let us look. This is just analysis to be able to look and determine what was happening. So in July 2023, it was around this period. So we have also to determine this relationship. So as dollar index was buying, when was this? Yeah, here. So between July 2023 to October, as the dollar index was buying, let us look at gold. Gold was also in a bullish market, was also buying. So we see that this analysis is not particularly what we want to see, because when we have index being a bullish market, we anticipate or we want to see gold being a bearish market. So as I can say, we had even a break in structure, but these are the times that we may get. We may also get that the relationship is not as we anticipate, because we want as gold is buying, we want the dollar index to be selling. But we see that this particular time, as the gold was buying, also the dollar index was also in a bull market, was a bullish market. So what can we say about this? So what we can say is, not every time we see that when gold is buying, the dollar index is selling. No, but we just have to be cautious while trading, and also do your higher time frame analysis. But what ideally the trades that we want to be in is when the dollar index, for example, is buying, we want the gold to be selling. So we see that around July also, end month, so this was the beginning of June to July. So July end month towards October, we see that we were in a bearish market. And if we look at the dollar index between July to October, yeah, this is an inverse relationship. So as the dollar index is buying, the gold is selling. So you can see the reason as to why you have to have this top-down analysis for the dollar index, or you should not trade just blindly in gold. So have that higher time frame, have that intermarket analysis with you, and to be able to get these high probability setups. And I think maybe I made a mistake because around June, yeah, it was June we were selling to July. And this is also when we had this, yeah, June to July. So yeah, when this, between June to July, we were bullish in gold, we see that in the dollar index we were bearish. So that was okay. So we want that inverse relationship. We don't want to trade when they are moving in the same direction, in short, because you can say that it creates low probability scenarios. So between October to January 2024, dollar index we were selling, so we were in a bear market. And what happened to gold? We also reversed here. So between October to January to, I think it should continue to January as in the dollar index. Yeah, this is January. We were in a bear market, so here we should be in a bullish market. Yeah, to January. Yeah, so that's the relationship that you should look out for in the dollar index versus the gold. So you want that relationship to be there. You don't want to trade when they are both moving in the same direction. There are instances, by the way, that they move in the same particular direction, but we just want to trade when this pair is moving against the other. Yeah. So that's all I can say about this, the dollar index. And you can see also when in gold, when we don't have this high previous data, since these highs have not been recorded before, when we don't have this previous data, how can you know how far this market will go? So how far this market will go will be determined by the dollar index. So once the dollar index hits the opposing imbalances, like here in the monthly to monthly, when it hits and we confirm a shift in direction, then also in gold, maybe we may anticipate consolidation. So that's when in gold we may anticipate consolidation or a reversal. Yeah. So that's it for the relationship, but I urge you to go into your charts and be able to study this, the two pairs, and do even more on intermarket analysis between the gold, the dollar index, and also you can also look at the indices, how the market moves between all these three pairs, the indices, the dollar index, and also gold. Yeah. So that's it for this lesson, and I wish you all the best in your trading.